Hello, and thanks for joining us today. I'm super excited you could be here. I'm really, really excited for this interview because we're actually talking today about probably one of the biggest problems of the business credit reporting agency. For anybody that's followed me for like 15 plus years, I've complained and I've said, this is horrible. It needs to change. And who's going to change it? And then somebody did. Somebody actually fixed the problem that haunts all of us and realistically makes business credit building hard. This is the one thing that makes it hard. Like, if it weren't for the problem this guy solves, then business credit building would not even be difficult. And yet that is the actual mission he has set out to solve. And I'm super excited, and you're going to understand why, because it's a big problem that's going to help you solve as well. So with us today is Henry Magun. Now, Henry is the founder and CEO of Hansa. And prior to co-founding Hansa, Henry actually spent 4.5 years as an investor in New Enterprise Associates, where he focused on early stage B2B and enterprise technology companies. So earlier in his career, he was also an early team member in Evenly, a dental startup. Now, Henry earned a BS in mechanical engineering from Stanford University, where he was a Mayfield Fellow and met his Hansa co-founder, Eddie. Outside of work, Henry enjoys cycling, woodworking, building furniture in his workshop, traveling, and cooking. Henry, what is going on, man? Welcome to the show today.
Hey, Ty, it's good to see you. That is a very comprehensive intro, so I appreciate it.
No, I think I don't even remember. I think it was the podcast interview where you first came across, and I looked at what you guys did, and I was like, "Oh my God, I've got to get on a phone call with this guy." And I like immediately reached out, and I'm like, "We've got to talk," because I just have so much respect for your guys' mission and what you guys do to help the industry.
I appreciate that. Thank you. Really excited
So
to be here.
yeah, I appreciate it. Let's start there. Okay, I've given enough teasers, but talk to me a little bit about what Hansa does and the problem that you guys solve.
Absolutely. So we started Hansa when we saw, a problem that a lot of your listeners and audience have faced throughout their careers as entrepreneurs, and a lot of the organizations that you work with, which is that it's really hard to build business credit in the U.S. for small businesses, and there's a number of reasons for that. One of those reasons is that it's a very opaque category, as you point out on a lot of your shows, right? It's really hard to understand who reports, when they report, what actually is being reported, and then ultimately to actually see what's being reported about your business is quite difficult. So that's one problem. But there's an underlying problem that drives that, which is that most creditors in the US do not report credit that they extend to businesses. That can be credit in the form of loans. That can be credit in the form of trade credit between a vendor and a customer. It can be a credit card or a charge card. It can be a merchant cash advance product. It can be a line of credit. There is a very long list of potential types of credit that it could be. But ultimately, the TLDR is that in the US, unlike in consumer credit, most business credit goes unreported to any business credit bureau. And the consequence of that is that it's really hard for the borrowers or the obligors, depending on the type of product, to actually understand when they're being reported, understand what's being reported about them, and ultimately build credit, which is the kind of really the goal here. And so we started Hansa to solve that problem of understanding, why don't creditors report on the commercial credit they extend? And is there a way that we can solve that from a technological standpoint? And so we sought out to solve that problem. And ultimately, that's what we do. And so Hansa is a platform that makes it effortless for commercial creditors to report the trade lines that they have extended to the business credit bureaus. And by business credit bureaus, I mean Dun& Bradstreet, Experian Business, and Equifax Business. We also can furnish data to the SBFE, the Small Business Financial Exchange. And we make that an effortless process for those lenders and creditors. And then on the front end, we actually create a portal for those lenders to give to their customers. Those might be their borrowers or their cardholders, the small business owners who are receiving that credit. We give them a portal to track what their creditors and lenders are reporting about them, track where they are reporting it to, and overall bring a level of transparency into this industry that has historically been extremely opaque and difficult to participate in.
Yeah, I love it. And probably 70% of the people listening now are already on your website. It's like, oh my God, that's such a big problem. Like I was in a call with Dun& Bradstreet once and I asked them, I said, like it's statistically like over 90% don't report. And they gave me the actual numbers and it was like 95% like of vendors don't report. Like it was even worse than I thought it was. So let me ask you this, like what the heck? Like so many people ask me this question. So I'm interested from your perspective, why is that? Like in consumer credit, by default, everybody reports. But in commercial credit, how's it possible that 90 or 95% of those that issue credit don't report? Like what causes that problem in everything you've researched?
Yeah, it's a great question. It's actually worth probably, you mentioned the consumer credit side, so it's worth zooming out a little bit and even introducing a little bit of history there. So in the consumer credit space, to your point, pretty much every consumer creditor in the US is furnishing data to a credit bureau. And so consumers enter their relationships with lenders with almost a 100% expectation that if I take out this credit card or I take out this car loan or I take out this mortgage, they go into that relationship knowing that they are going to be reported on. It's going to impact their personal credit profile and ultimately have an impact on their future access to, capital in whatever form they might need. That ubiquity of reporting in consumer lending is something that really developed when in the late 90s, early 2000s, when we started to see more awareness amongst consumers about their credit data and their credit profile. I always like to make the joke that, if you're walking around Manhattan and you walked up to someone on the street in, the early 90s and you asked them their credit score, they the vast majority of people would have no idea. Nowadays, if you walk up to a random person on the street in Manhattan, you ask them, what's your FICO score, or what is your credit score? The likelihood that they will know plus or minus 50 points is actually quite high. And so there's this level of consumer awareness that emerged as a consequence of the passing of the FACT Act, which was the congressional act that basically made access to credit data free for consumers. And coming out of that were a lot of financial platforms that were consumer facing that enabled consumers to get access to, their personal credit data for free. Credit Karma probably being the most known entity, although there are many others. And now it's become table stakes where pretty much every credit card issuer or bank is enabling their consumers to access their personal credit data natively inside their apps for free. The result of all of that becoming free was that consumers started to become much more aware of it. When consumers became more aware of it, they started to care about it more, and they wanted to be underwritten instantaneously based on it. And the consequence of that was that the creditors and lenders realized that, hey, for this to work, and for the market to operate most efficiently, where we can underwrite consumers based on this data, we have to all participate and basically furnish data. And so while there's not a legal mandate per se that requires you to report data as a consumer lender, there are rules that require how you do it if you do choose to do it, but not that you do it. And despite that, everyone does it because they've realized that basically for the overall good of the consumer financial markets, reporting and participating in the credit ecosystems, it helps the lenders underwrite better and it helps consumers get underwritten better. That standardization that I mentioned, where there are laws that govern how you do it, but not that you do it, that has not made its way over to the SMB side. And so in commercial and small business lending and credit, there is very little standardization. Each bureau, for the most part, has their own standards of data, their own data points that they ingest, their own list of types of credit products that they can ingest. And overall, there's a lot more, or rather, a lot less connection between what a file looks like in this bureau versus this bureau versus this bureau. And consequently, that lack of standardization makes it much harder operationally for lenders and financial institutions to participate in these bureau ecosystems, which has resulted in to your point, a pretty low participation to date when you compare it to the consumer side. The last thing I'll mention on that point is that, kind of closing the loop on the first point I made around consumers entering relationships with their lenders, knowing that they're going to be reported on. Because that doesn't exist in SMB quite so much, even though we are at a tipping point, and people like yourself, companies like ours, there are many people out there that are educating the market. We still have a long ways to go, and so SMBs don't necessarily enter these relationships expecting to be reported on, and consequently, the lenders and creditors don't quite know how to get the benefit of it. Because the reason to report, there are a couple of reasons. One is to help build business credit, but also it builds obligation between the borrower and the lender. And so for that obligation to really work, where it creates that level of accountability between the borrower and the lender, the borrower needs to understand it. They need to be able to track it. They need to know what it means to be reported on, or else it's not going to have any impact on their behavior. And so, the FIs, the lenders haven't quite figured out how to leverage that fully to get the benefit out of it. And so there's also that level of, trying to figure out what the ROI is for them to participate in the ecosystem beyond it just being a benefit for their SMBs.
Yeah, and I really appreciate, because it's the most thorough explanation I've ever heard, and it's just so true. Like I always said, that in consumer lending, you have a lot of regulation. Because I mean, don't get me wrong, like consumers whine a lot and they complain. Like something bad happens, they go complain, and then bureaucrats like put laws in place. And business owners, there's just like a greater level of accountability and ownership that, like, we do things and we screw up. We're like, yeah, I could have done better there. And so you just don't see that much regulation at all in the business lending and business credit space. And I don't think it'll ever change. I don't really think that'll ever change. I mean, people have been telling me for the decades I've been in the industry that it will, and I'm like, I haven't seen move needle even a little bit. So unfortunately, I think that the problem continues. But let me ask you this. Why do the freaking bureaus make it so hard? Like, it's interesting because now I send people to you and they even mention it, but I've had hundreds of people come to me, and ask how you report. And I made a PDF, like, okay, we'll go to Experian, you go here, go to FX, go to B. And I had a great relationship with D&B, and I found their head of people, their head of people, right? And we even had a relationship with D&B. We spent a lot of money, bought all their data, knew all the players in D&B. They denied us. Like, we couldn't report. Even the internal people like that took care of our relationship, they're like, we can't believe this. So like, but it was interesting because even having an inside person I would direct people to over there, Henry,
Yep.
they couldn't even get reported. Like, even when I knew the person that was the head of trade payment data at D&B, and I'm like, go talk to her, she's the one that does it, they still couldn't get reported. So why,
Yeah.
even if they get through all of that, why the heck do the bureaus make it so difficult to report?
Yeah, I mean, it's a great question, and it's not intentional by any means, right? We really try to, I believe that the bureaus, they all have very good intentions, and they want to build the best data sets they can, right? At the end of the day, they are data companies, right? And so there's all the incentive in the world for them to figure out how to ingest clean, good data that helps them build out their data sets. The more data they ingest, the more valuable their scores are, their reports are, things like that, right? So they want to be as comprehensive as they can. By no means is it intentional on their part to make it hard. There are some, larger components to the business credit data ecosystem that just inherently make it a harder problem to solve than in consumer. I would say the most pressing one and the hardest that you face is that identity in small business doesn't work quite as well as it does in consumer. And what I mean by that is, when somebody gets a social security number, right, and that's tied to their credit profile with each bureau, that social security number for the vast majority of cases is persisting with that person throughout their entire life, right? And so it makes identifying and creating a single unified record on that person's credit much easier. Businesses are very different, right? Businesses might get an EIN because they started as an LLC. and they might convert to a C corp and they'll get a new EIN. Then maybe they get acquired and they are part of the EIN of their acquirer. Maybe they go out of business and the business owner starts a new business and gets a new EIN. There might be a business owner who has 3 or 4 businesses. Each of those have their own EINs. And so consequently, the concept of identity and what we call entity resolution, which is basically making sure that there's one single record about this business in each bureau, is actually a really difficult problem to solve. And so that's one reason that the bureaus are very careful about how they're ingesting data. The second one is that because there is much less regulation in the commercial credit market than there is in the consumer credit market, the onus on maintaining clean data falls more heavily upon the bureaus than it does upon the lenders who are the contributors, right? If you're a consumer lender and you are reporting to credit bureaus on the consumers that you're lending to, you are taking on certain responsibilities under the FCRA, in which you have legal responsibilities to report accurate data, to provide a way for your customers to understand what you're reporting about them, to make sure that they know when you're pulling their credit. A lot of protections exist for consumers that make it easier for the bureaus to maintain clean data sets because it puts more responsibility on the contributors who are the lenders and the creditors in the consumer space. In the commercial space, because those regulations don't exist, there's a lot more onus basically put on the bureaus who just have to basically police themselves. And their goal is, how do we maintain the strongest, cleanest, most up-to-date data set? If we can't go after from a legal perspective, a contributor in the same way that the government would for making up fake data about a consumer or something like that, right? That they have to be a lot more stringent themselves, and consequently, they place a lot more filtering and emphasis on kind of their process of onboarding a new contributor into their ecosystems, because there's a lot of fraud, and it's relatively easy to commit fraud, right? And the recourse against tomorrow you spinning up a lender and saying, hey, I lent Henry's LLC $500,000 and start reporting it to bureaus. There's less protection from the government for me against you doing that. So it comes down to the bureaus to basically make sure that that's legitimate, which is a hard job to do. And so it is by no means malicious on their part that they make it difficult. It's really kind of them having to police themselves. And the last point I'll make is that unlike because of that lack of regulation, unlike in the consumer space, there's no equivalent data standardization that has been agreed upon by a central entity. So in consumer lending, you have the CDIA, and the CDIA is an organization that basically governs how consumer credit data is reported by lenders. So they basically manage Metro 2, which is the standard for consumer reporting. They manage that standard, and they provide releases on updates and things like that. And they have meetings every year about what they want to look into and how they want to update the Metro 2 standard. The lack of an equivalent data standard and third party that creates and governs the data standard in the small business space makes it even harder for the bureaus, because it's very difficult for one bureau to say, hey, we come up with a new standard, and then to force the other bureaus to follow their standard, right? You almost need a kind of a central neutral entity to come up with that standard and get all the bureaus to agree to it. And that hasn't happened yet.
I love that. I think they're mean. I just think they're mean, but I'll go with your reasoning instead of the fact that they're mean. But let's talk about what Hansa does to fix that, because there's a lot of benefits here with reporting, right? First of all, I know that you work with credit issuers and lenders a lot and help them report. And I thank you for that because we're out there getting all kinds of loans right now and credit. And a lot of the stuff does not report, right?
Yeah.
And these aren't even just small town vendors. Like I'm from a small town. Like I think about my local grocery store. I know they don't report. But I'm talking about major vendors and major lenders we're using, they don't report. And that's the main area niche that you're really tackling. And I appreciate that. But there's a lot of people out here that are on different sides. They have a small business. They want to report their own customers. They understand business credit. They've got the education. They want to report. Then we've got people listening that say, "Why isn't my freaking lender reporting, right? Or why is my credit issuer?" They know people, or they're getting loans or credit from people. They want to help them report, and those people don't know how to report. So
Yeah.
in these cases, like, what's the process like if somebody's watching where they want to report to you, or they want to refer a lender, credit issuer, somebody in your niche to help you report? And another question to that, can you help, like, if can you help anybody report, or are the restrictions of like who can come to you to report their customers' data?
Great questions. I'll start on the latter, and I'll kind of work my way backwards into your earlier questions. In terms of restrictions, the answer essentially is no. We are very unique in our ability to report pretty much any type of business credit obligation between a credit issuer and a borrower or obligor, depending on what type of product it is. So today, as I mentioned at the top of the call, right, we have customers who are term loan lenders, merchant cash advance issuers, credit card issuers, charge card issuers. We have suppliers and vendors who issue trade credit to their customers. We have custom companies that issue lines of credit. There's a very broad range of the types of products that we are able to report. We built our technology to uh, essentially be able to ingest the raw data about any of those types of products and standardize it into essentially bureau language and bureau data points that the bureaus need. So that's one. We are also able to provide that as a service for companies that have a fewer number of customers than normally the bureaus would have, as a threshold, right? So, we have companies that have less than 100 customers about whom they are reporting invoices or recurring obligations to the bureaus through us. So size is also not necessarily a major blocker. There is a credentialing process. So, all of our clients for whom we are furnishing data to the bureaus do go through each of the bureau's credentialing processes. So we don't sidestep that, right? We are still putting them through. Each bureau is doing their own kind of contributor credentialing process on each new contributor for whom we are going to start reporting. And at the end of the day, the contributor themselves is still the one submitting the data. They're doing it through us, and they're using our platform, but it still will, in the bureau's ecosystem, show that Ty's supplier is the one who issued credit to Henry's LLC, right? Even though Hansa was the vehicle through which you did that reporting. So that's the first thing I mentioned. The second point that I'll make on your earlier question, in terms of getting your lenders to report. If you are a business who, maybe you have a credit card, or maybe you have a term loan or a merchant cash advance product, or any type of credit you might have been extended. The first thing I would do is ask your lender or your creditor, "Hey, do you report my payments to the business credit bureaus?" It is a pretty opaque ecosystem, and so it's hard to tell whether or not they are without actually just explicitly asking them. What I can also say is there are a lot of lenders out there who write on their websites. They'll have blog posts that say things like, build business credit with a loan from, whatever. And then when you actually ask them, do you report to the business credit bureaus? They say, no, we don't. And so it's very opaque. And at the end of the day, the only really way to know is to actually ask your lender, hey, do you report my payments to the business credit bureaus? If so, can you provide me the proof that you do? And if they're not doing it, the way to solve that is to refer them to us, to request it. We are not able to report a loan without the lender of the loan, telling us they want to report that loan, right? Loan, right? At the end of the day, it is still the lender's decision of whether or not to participate. But kind of drawing the analogy to that earlier story I told about the consumer lending ecosystem, consumer lenders started participating when consumers started demanding it, and they said, "Hey, we care a lot about our credit scores. And we care a lot about building credit, and so we want all of our lenders and our credit card companies to report to the bureau so we can build credit history." We're starting to see the same shift occur in small business. And so the best thing you can do if you want your lender to start reporting is to ask them, hey, I want you to start reporting my payments to the business credit bureaus. And you can even say, Hansa is the company that does that for you, and we can make it super easy. We do get referrals from small businesses a lot who have gone to their lenders and said, "Hey, I want you to start reporting," and then the lenders come to us and say, "Hey, can you help me do this?" And so that demand from the borrowers, the small business owners, is really the thing that's going to be the driving force in this category of making it more ubiquitous, and making it a standard process where every lender is participating in the bureau ecosystems.
Who do you report to?
It depends on the credit product, and it depends on the lender. So we are capable today. We are capable of reporting to Dun& Bradstreet, Experian Business, Equifax Business, the Small Business Financial Exchange, more commonly known as the SBFE, as well as within each of those bureaus. So Dun & Bradstreet, Experian, and Equifax, they have within them give to get consortia. The SBRI, the SBCS, and the CFN, across each of those bureaus are in-house give to get consortia. You can think of them almost as like a bureau within the bureau, that we're also capable of reporting to. So we're very broad in our coverage of where we can report. Different bureaus will ingest different credit products. So, some will take MCA, merchant cash advance products, some won't. Some will take trade credit, some won't. Right. And so it sort of depends on what the product is. But our product is built to be full coverage. And so, we're kind of a single point of entry for the lender or the creditor to get that data into our system, and then we will route it to wherever they want us to. We're not prescriptive about where we report to. That is driven by the lender. So the lender tells us, hey, I want to report to this bureau, or I want to report to that bureau. That is up to them. It is all fully their right to choose where they report. We are the tool that will make that effortless for them, but we're not prescriptive in telling them where to do it to.
How easy and fast is this process to be able to get? If I get with you today, well, talk to me about that. What's the process if I want to start reporting? And then what can I expect? Like, how easy and fast is it for me to be able to get the ability to report?
Yeah, it's so I'll be very honest. It really depends on the credentialing processes, the type of product, and candidly, the size of the lender, right? So the larger you are, the more established of a business history, the kind of more customers you have, that is going to make it easier for the bureaus to run their credentialing processes, because it's easier for them to verify that you are a legitimate business, right? They're in their credentialing processes. The bureaus each do their own thing, and they don't publicize what they do. But for the most part, they're looking up as the lender, they're looking up your business credit data. They're looking up your business registrations. If you're a licensed lender, they're looking up your lender licenses. They're looking up your address, and they're looking up all your history as the business owner, and they're basically doing their diligences on is this a legitimate lender? Is this a legitimate supplier? Whatever it might be. They're looking at your website, your terms and conditions, all of the above, right? Um, and so, the fastest we ever got someone credentialed, we had a same day approval once. That was huge. We had a little party in the office with that one. We submitted a lender for credentialing to a bureau, and we got the approval just a few hours later. It was a relatively large lender, and so it wasn't hard for the bureau to do their diligence. But it was nonetheless a very exciting thing for us. I'd say we typically average about 2 to 3 weeks on getting a contributor credentialed across all the bureaus, and we handle that whole process, right? So there are a couple forms we need filled out by the contributor, by the lender. So they fill out a couple forms to give us some information about their business, and then we submit those forms on their behalf, and basically help them through that process and manage it for them. But 2 to 3 weeks, and then in that time, that is when we're also doing the data onboarding, where we are taking their data and getting it into our system and mapping it accordingly, and making sure that we have what we need to do the reporting. So typically a 2 to 3 week process end to end, and then we can submit the first reports on behalf, the first statements on behalf of that lender or creditor or supplier. So it's a relatively quick process, and in the meantime, that's also typically when we are getting that supplier or lender up and running with our portal embedded inside their product, so their customers can actually track, hey, what are they reporting about me? What bureaus are they reporting it to? And using that as a tool for engagement. Because at the end of the day, the ROI that we like to pitch to lenders is when you report to the bureaus and you show your customers or your borrowers what you are reporting about them, you give them the tools to track it, you make it transparent. All of a sudden, it becomes a very tangible feedback loop between you and your customers. And that feedback loop, it's a positive feedback loop, right? You're helping them build business credit. You're giving them an incentive to pay on time. It's a reward. Whereas, historically, a lot of, business credit data is actually just, the lender doesn't report. And then, if unfortunately the business is unable to repay, if they default, then the lender might report the default, right? Or the charge off. But they didn't report any of the payments up until then. Or they might not be reporting any of the payments on any of their, borrowers who are paying on time, right? But in reality, what it really should be is, yes, there is the kind of like negative side of it, which is if you don't pay, it's going to hurt your credit. But it also has to include the positive of if you do pay on time, it's going to help your credit. It's going to help you build credit history, right? And it's really important that you have both. And that's really what the ecosystem's lacking today. But that feedback loop where it creates that ROI and engagement between lender and customer only works when the customers can see it, they can touch it, they can feel it, they can interact with it. And that's why our embedded tooling is so important to the product, and is ultimately really what helps the lender capture that ROI. Because the kind of line that I like to use is if you're reporting to the bureaus but your customers don't know about it, there's not much you're really getting out of it, right? It's not affecting their repayment behavior, because if they don't know about it, it's not going to make them it's not going to make them afraid of missing a payment. And if they don't know about it, it's not going to incentivize them to make on-time payments, right? So if they don't know about it, you're not really getting much out of it. The key is making it a transparent process where if they can track it and they understand what's happening, that's what ultimately drives behavior change and builds a stronger relationship between the lender and the borrower, or the vendor and the customer. And it's that continuous feedback loop with engagement that locks it in. And so 2 to 3 weeks, we get everything up and running. And we take clients live, and they're off to the races from there. And then beyond that, they can automate the data upload process from their systems. So it's zero effort. Or if they want to do it manually, we have clients who do that. It's 5 minutes a month, sometimes less, sometimes 1 minute a month. They just upload a CSV to our portal, and it automatically looks at all the data, verifies it, and then ingests it and does the reporting on their behalf.
Henry, thanks for coming on with us today, man. This has been phenomenal. If for those watching that are ready to take a next step to either have their customers report or their lenders, their credit issuers, the people they're dealing with want to get them to you to report, where should they go? What should they do next?
Yeah, so our website is withhansa.com, WITHHANSA.com. So you can see our logo in my background here. And we have a request for a demo form on the website. So I would encourage folks who are interested in if you're a lender and you're interested, or you're a vendor and you're interested in reporting, or using our tools for your customers, please request a demo. If you are interested in having your lender report, I encourage you to reach out to them first and ask, "Hey, are you reporting?" If they're not, please refer them our way. We have either send them the form we have on our website where they can request a demo, or if you want to reach out directly to us, you can reach out directly to us, and we can reach out to them and say, "Hey, we've been getting requests from your customers to get you to report, and we want to do that." And so we can also reach out directly to them if you reach out to us and request that. So you can also do that in the form on our website. We have a contact us form at the bottom of the homepage, and you can just say, "I have a loan with so and so. They don't report. Can you reach out to them and inquire if they would be open to reporting through you?"
Awesome. Henry, you're the best, man. Thanks for coming on with us today.
It's great to see you, Ty. I really appreciate it. Love what you do. Love the mission. Have been a big follower for a long time, and grateful for the opportunity to be on the show.
Yeah, thanks, man. I appreciate it.
Awesome.
All right, so listen, Henry won't tell you this, but he's brilliant. I mean, that's the reality. I spent a lot of time with Henry, like many, many hours, because there's so many things we want to do with him and so many things that we want to do to push this mission forward, because it's important. Look, as I said in the beginning, business credit building is hard for mainly one reason. 95% of these guys don't report. If everybody reported to the reporting agencies, business credit wouldn't even be a thing. Wouldn't even think about it. It would be just as easy as to build this consumer credit. And many of you know that's been my mission for decades, to make it easy. And the way that Henry has done it and Hansa has done it is it's just nothing short of brilliant, honestly. I mean, he really has simplified this process. And there's a lot of things I want you to think about as we wrap today. First of all, think about your customers and the ability for your customers to report. I mean, yes, Hansa is specialist in helping credit issuers and lenders and those businesses that issue credit and issue financing report. And for anybody you're dealing with that's helped you in the past or helping you now or helping you in the future, you need to tell them, so you're a scumbag if you don't report. Like, it's easy. Like, Hansa makes it simple. Like, why would you not report? It used to be difficult. It's not hard anymore because Hansa makes it easy. So you need to direct all of those people over. And if you have a legitimate business and you have customers and you understand the importance of business credit, then you need to get in touch with them as well and start the conversation about having your customers actually report. We can together all solve the problem. It's just a matter of, we didn't have a solution before. Now we've got it. Like Henry is. Ta-da, here he is. He created the solution. Fast, it's simple, it's easy. All we have to do now is get it out in the world, and we could do it by taking those lenders and credit issuers that we're dealing with and push them over there. And then we can also get our own customers reporting and get them credit for what they're doing in our business. So you want to go to withhansa.com. That's WITHHANSA. When you're there, go to the bottom and take less than a minute and subscribe on their social channels. They're telling you what's going on in the industry in real time. It takes less than a minute in the center bottom of the page to be able to do that. And then also, while you're down there, go ahead and click to actually check out their embedded credit dashboards right on the right side. You can check it out. It's super cool. Like, we didn't even really dive into that. Not only can you report and have lenders report, but then they can literally embed a dashboard where the customer can see like what's being reported and even access other business credit reporting data on that actual dashboard. It's freaking really cool, but you ain't going to believe me unless you see it. So go to withhansa.com, go to the bottom, subscribe on the social channels. Even at the bottom, you can then click at the top, the schedule a demo to actually see it. And you want to check out this embedded credit dashboard because it's one of the best benefits. It's not just they report, they give us extra transparency and capability for the customer to then see it reporting and then see other credit data to tie it all together. And that's like a whole extra step even beyond reporting. And you get it all with Hansa.com. So make sure you check it out today. Thank you very much for tuning in. Take care and have a great day.